We're gonna try this again. I really hope it works this time. Can you guys hear me? You guys hear me? I'm gonna share a Facebook link for you guys. Am I good? I'm gonna share a Facebook link for you guys. I'm gonna go ahead and post it. All right, I'm good. I'm live. We're gonna try for a third time. We're gonna try for a third time. Ladies and gentlemen, my $100,000 options bet to be the names that come bottom, the ones I'm going to buy, the ones I already bought, what my portfolio looks like in this declining market. I'm going to show you all that and more. Merry Christmas. I am Mark Melnick, and this is the Newsbeat Show. Good morning, ladies and gentlemen. Welcome to the Newsbeat Show. We have so many great things to show you, so many sectors that you could actually diversify in, things that had no fundamental downfalls recently, however, had a price downfall recently, how you could take advantage and when, in my opinion, I wouldn't say once in a lifetime opportunity, but I would say this is about a once in a three time in 8 to 10 year opportunity. I mean, maybe like every 3, 4 years, you'll get an opportunity like this approximately. I'm going to show you all of that, but first, I need you to agree to something. You need to agree that you hold Mark Melnick and T3 Live, not responsible for anything you hear, see, listen to, touch, feel, smell, look at, anything you think about prior, during, or after this video. And you agree to hold both of us, T3 Live as a single entity, and myself, harmless. If you do not agree to it, kindly exit this video. If you do agree to that, you may continue. Thank you so much for agreeing to that. So we have so many great things that I actually want to show you today. I want to actually show you, and as of Friday, so just going back to Friday, I said this is the bottom of the market, and let's take a look at actually what happened. So as I was telling you that on Sunday night, obviously before this down move happened in the market on Monday, we actually had another downturn. And then, of course, a lot of people are referring to I don't want to go into my 2018 prediction where I predicted this coming. And I don't want to go into the fact that I was telling you on Sunday night that you're going to have every Captain Hindsight analyst coming out and reiterating the words that we were telling you here. However, I want to show you that you don't need to actually pick the bottom and you could buy into this pullback slowly while still guaranteeing you could be part of the up move. And I say that because a meteorite could hit the market and it could shut down indefinitely. I mean, I don't want to go into those statistical outcomes, but with that being said, there is a tremendous opportunity, and I want to show you what I bought. And I have my little Robinhood thing here. So here's my charitable Robinhood account for what I've been buying, and let's just move that over here. And if you can't see, it's I have a Goldman Sachs call spread. I have BABA call spreads, NVIDIA. So I'm basically long Goldman, long BABA, long NVIDIA, long BX, short GLD, which hasn't been working. The BX has been. Long UPS, long OIH, and long Citi. And I opened up how many positions? I opened up Citigroup calls on yesterday, and I opened up an OIH call spread, and I want to show you why I did that. And I also opened BABA, so that's 3 new positions, and I want to show you why I'm building towards my $100,000 option bet, which, if you don't understand options too much, it's a rather very large bet. I consider $100,000 of option probably the equivalency of holding $5 to $10 million in common stock. You could expect similar type of moves and volatility. So I want to show you how I'm entering it here, and I don't want to, as I already promised you, you're going to have other gurus talking about why the market bottomed yesterday, when in actuality, as you know, we were telling you that these Captain Hindsight gurus were going to be talking. Again, These gurus are bringing you zero value. They're bringing you what they're thinking. They're bringing you what they're considering. They're bringing you what is being told to you for the first time by some other guru, and they're coming out and they're doing it, in a very Captain Hindsight type manner. But what I wanted to do today is not only show you what I'm bought, what I'm going to be buying, but more statistical evidence, including technical evidence, maybe things that you haven't been using in the market to justify this bottom. So here are technical parameters that you may not be using. I know I'm not using. For example, I'm going to pull up the Bollinger Bands on the weekly here. One of the traders in our room pointed this out to me, and this is a weekly of. I mean, it doesn't matter whether you're in the Qs or spiders. I mean, this is a weekly of the Bollinger Bands, and you could see the Bollinger Bands. I'm focusing in on these blue lines here. I mean, I guess I can make them a different color. So what I want to do here is I'm just going to open up a fresh chart. Just going to open up a fresh chart here. One chart will be a good one. I want to just open up a fresh little chart here, and I want to just show you just the Bollinger Bands. Okay, here we go. Beautiful. So uh, let's uh, let's make these Bollinger Bands a little thicker. Yeah. Let's uh let's make the color maybe a bright orange so you could see. All right, so I'll make it a bright orange here so you could see. Um, so look, here's the spiders. Notice I want you to focus on the bottom end of the Bollinger Bands and see what happens every time we broke through them. Here is one time we broke through them on the spiders back in, I'm actually going to take you on the weekly here to the weekly Bollinger Bands. And I just want to show you how many opportunities in your life that you really had to buy here and what actually happened. So going back on the week of May 7th, 2010, I'm bringing you back 8 years ago, before you could legally drink, before that eggnog had to be a virgin eggnog and not a spiked one. So you could see right here the spiders hit the Bollinger Band bottom right here. Just going to zoom in and show you. You could see it hit the bottom right over here, this orange line, the bottom orange line. It hit it when the spiders hit 105. Next week you went to 117 in the spiders. You hit it here again, May 28th. You hit it at 104.38. Next week you got to 111. Right over here, and this week you broke it. You hit 101.13. Next week, you hit 108 in the spiders. And again, this is back when the spiders was $100. So you can imagine how big an 8% move in the market is within a week. And obviously, we shot up even much higher afterwards. So I'm just taking you back on memory lane here. Here's another time we hit it. You could see we stuttered on it for a few weeks and then exploded up. And I'm also just bear with me because I'm going to tell you how you could trade and take advantage of this. I could tell you what I'm doing, but right now I'm explaining to you why I'm doing it. Okay, so let's just be clear. There's going to be more than this. Now, right over here, you could see back in August 11th and on the weekly Bollinger Bands. And again, Bollinger Bands is something that I do not use at the moment. And you could see right here, we flushed hard through. We flushed hard through to the point where the Bollinger Band was about 12 points below on the weekly, right over here, where we flushed through the bottom Bollinger Band by, I'm rounding off 12 points. And then when we bottomed out here, we actually shot up very hard. This might not look like a lot to you here, but the spiders went from 110 to 121 in a week. It's massive. It's a massive bounce here. This is a weekly chart. Then you could see we hit the bottom of the Bollinger Bands here again. Spike up. You could see, and I'm just going all the way to 2018. Now we're in June 2012. We hit right here. We break through it. We explode higher. Oh, look, we flush through it again. Here's another instance where we flush through it about 9 points. Right over here. We flush through the Bollinger Band about 9 points. Look at the reaction. Bang. Look at that reaction. Look at that upward reaction. This is a weekly chart. Now let's look at something very dramatic. We're going to take you to that 2015 crash where The Bollinger Bands were approximately, I'm rounding off, 20 points away. 20 points away at the low of this green candle you see here. So flush through the bottom line of the Bollinger Band by 20 points. Next week, pop $17 in the spiders. You want to talk about handles moving in the S&P futures? This is it. Hit it again, break through, explode up. Hit it again, break through, explode up. Hit it again, break through, explode up. You see a pattern here? Hit it right over here back in April 2018, earlier this year, explode up. We literally went from 254 to 267 in a week. 13-point pop in the spiders in 1 week. It's a big move. Now I want to take you to our current state of affairs. So now you see, I'm going to delete this line. Now you see we hit it again right here on October 26th after the October down move. And even though we edged a little lower, we exploded up. I know it doesn't sound like we exploded up in November, from October to November, but look, the spiders went from 259.85 to 281 last month. Most people don't think about that. Most people don't think about the fact that the spiders actually bounced 22 points last month. Now I want to take you to our current scenario where the Bollinger Bands are just totally falling out of bed. We're totally, we're way below every Bollinger Band. Last week we dropped 12 points through, and then this week we dropped down. We're trading about 9 points, and again I'm rounding off, about 9 points through it. And this is the weekly of the spider going back to 2009. So you could see here, just delete these trend lines for you just so you could see more. You could see here when these Bollinger Bands break, let me just delete all my spider drawings. I'll redraw them if I need. You could see right here, I just want to make it easy for you to see, when you break this lower weekly end of the Bollinger Band, it has always, at least in this example for the past almost 10 years, and I'm taking you back to, 2009-ish, 9.5 years. Every time we have broke through this level, we ended up popping up within a week or two. So for me, statistically speaking, I actually took these charts and I actually went back further. And when I went back further, I actually went back to 1980, the year I was born. If I'm dating myself, I guess that's exactly what I'm doing. I went back to 1980, which encompasses about 39 years worth of data. Every time the spiders have crushed, and by spiders I also use the S&P. Every time the S&P or spiders or Dow has broken through these weekly Bollinger Bands on the bottom end, similar to what you see right here, we have always, historically in the past, 100% of the time, didn't only bounce back, but had a major up move off of these levels. I think it's very good to talk about this now because you could see right here the type of potential there is in the market. There were other technical parameters that I was also using that has been showing really interesting things on, no, not the parabolic SAR. We're showing really interesting things and other things that were going. So here's another interesting one. I'm pulling up the weekly of the Arun oscillator. I have never used an Arun oscillator. I'm just going to move my mug up so you can see it. And this Arun oscillator basically goes from 100 to negative 100. Every time it was at negative 100, the last time it was at negative 100 was in the week of August 28, 2015, was right over here. And we bottomed out at 182.40, and the next week we hit 199 in the spiders. Again, a parameter that I have never used. Here's another instance going back to August 2011, the week of August 12th, 2011. You can see down here I'm using this Arun oscillator, again, a technical parameter I have never used in my life, just to see comparatively, just trying to find more statistical and empirical evidence that the market indeed bottomed. And you could just see right here, we bottomed out at 110.27 and then we bounced to 121. The beautiful thing is, even though where we bottom out, I'm showing you green bars, the beautiful thing about this market is we're on a red bar, so the bounce didn't like theoretically happen yet. But what you will notice is in the past, if you look at the weekly of the Rune oscillator, and for me it's all statistical. If you look over the past 10 years of the Arun oscillator, there were 3 points in the past 10 years which you could have purchased the market when this Arun oscillator, God, it feels weird even saying that, was at negative 100. This is the third time. This is the third time in the past 10 years that this Arun oscillator was at negative 100. And every time it hit negative 100, the ensuing rally was massive in the market. The ensuing rally was absolutely massive in the market. So that was another example. So I'm going to remove the Arun oscillator. That was another example of, you know, statistical reasonings of why this happened. The next one I was looking at, which I admit I'm not an expert at, is the Ichimoku cloud. And it basically, I'm going to remove the Bollinger Bands. We already used that. I just want to make it easy for you to see. So right now you see an Ichimoku cloud on the spiders, and I'm taking you all the way back here. And I want to show you points where this sort of cloud formed. It looks like, I don't know, looks like the cloud that comes out of me after I eat like a lot of beans. With that being said, look what happens when you break the bottom end of the cloud. I want to take you back over here. I want to take you back over here, back to 2011 in the spiders. Every time you were, and again, I know people use Ichimoku Cloud extremely effectively. I think every form of technical analysis is good as long as you can make money on it. I don't personally use it. You might not personally use it, but you should look at it for statistical and empirical evidence if you want to justify this market bottoming. And that's what I'm showing you right here. So again, do I use this? No, but look. Here, you broke the Ichimoku cloud on the bottom, you shot up. You tried to pull below it again, you shot up. You tried to pull below it again, you shot up. You tried to pull below it again, you shot up. Every time you were at the bottom below that, what looks like a gas cloud, every time the spiders were trading below that in 2011, you popped up. Now, here's another example of trading below it back in August 2015. And again, here's a green bar. It actually shot way below it here in August 2015 and then exploded up. We're blessed that we're dealing with a red bar now because we could buy at the bottom of the range as far as we know as of today. So here's another instance where you were on the bottom of the cloud. You shot up, pulled back below it, you shot up. Look right over here for a few weeks. And this is a weekly. You pulled back below it, you shot up, pulled back below it, shot up. Every time, excuse me, you've been below this Ichimoku cloud, you shot up. Ladies and gentlemen, what I am insinuating to you is within the next week or two, maybe three, that the spiders are going to go to $250. Now remember, I was the person before everyone on Wall Street, and I show you again because I was never that blind bull. In fact, I was the person putting lower targets on the entire market. I was the person saying the market was going to close red for the first time this year in 10 years. I have thousands of timestamps sent out to T3 and everyone else. I am that same person telling you that this is a buying opportunity. I don't want to say of a lifetime, but at a 3 to 4 year, every 3 to 4 years, you'll get a buying opportunity like this on average, at least as of recently. Look how far below you are on the Ichimoku cloud. The odds of us, you have to understand, even if the spiders bounce to 2,500, we could still be bearish overall. I don't want you guys to come out saying, Mark is bullish on the entire market. Not really, but I do humbly believe I'm going to make money on the long side. Then I'm going to show you why I'm loading the boat with bets, where I put my money, where I'm going to be putting my money tomorrow when the market opens. So I just want to show you, whether you use Ichimoku Cloud or not, you're trading way below the bottom part of it here. And again, in the past, that has always resulted in a big, large up move in every market environment. Okay, let's get off the Ichimoku cloud. I just wanted to show you cool technical cool technical things that have resulted in bounce. Also, if you follow the Elliott wave oscillator, something I don't, on the weekly, even if I think you go, not the monthly, but the weekly, you'll notice on the weekly, every time you form these mountains, it looks like a curve, like a mountain, like, pretend this is like a mountaintop here where it goes up and then down and up and then down and oscillates like a wave, right? Elliott wave oscillator goes up and down. Notice that when you're at the pinnacle of a down mountain, let's call these a little down mountain. Here, I'll move my mug again. You see these little points here? I want to take you back to 2015 and 2016 here, where the weekly Elliott wave oscillator was at a down point. And you could see right over here, you pull down. Once you hit the pinnacle, you bounce. I'm using the spiders as an example. The truth is you'll probably see this on the majority of names that move with the market. So you see you get a pinnacle here, and then you bounce. You get a pinnacle here, right over here. Look how you bounce. Compare it to the top. See the line? Notice how every time you're at the bottom pinnacle, you bounce. A similar bottom pinnacle in the market, the similar bottom pinnacle is insinuating actually that the spiders get to 270. If you think that the oscillator is going to look similar to how it has in the past on the spiders, there's there's statistical proof that the spiders are going to bounce 36 points off of this level, which is, I don't have to tell you, 15% market move is astronomical. Astronomical. So, just want to show you the Elliott wave oscillator again. Very effective tool, I'm sure, for those who know how to use it. I don't use it, but I do want to show you um, how that works. Another thing is the relative strength index, the RSI. So right here, I'm going to just remove this moving average. So right here on bottom, you see this RSI 14. It's the relative strength index. And if you actually just draw a line where you started bottoming out, you'll notice that every time you're at this bottom end of the range here, you rallied regardless of where the market was at the time. Regardless of where the market was, you rallied in the ensuing few weeks to few months. Right now, the spiders on the relative strength index are actually, believe it or not, lower than they ever were in the past 10 years. So according to the relative strength index, if you want to use this as an oversold indicator, and again, I try to refrain from using that word because I think people justify long trades by saying, "Oh, it looks oversold." Why is it oversold? Because it went down too much. Believe me, how many traders are licking their chops right now after seeing Apple at 233, pulls back to 210, they think they have the buying opportunity of a lifetime, they buy, it drops to 200, 190, 180, 170, 160, 150, and they don't know what the hell happened. And they were buying on the way down. So right now, one of the reasons why the market is such an opportunity is when we move down like this, a lot of the traders are not going to be able to participate in this move. A lot of traders are looking at their long-term swing accounts, their 401ks, and if you look at it over the past few months and you're like 99.9999999% of people, you're getting slammed on your 401k. And what that does is it disheartens traders to the point where they become extremely risk averse, where they don't want to touch anything. Everything looks too disgusting. Every time they thought it was going to bottom, it moved lower. Every time it moved lower, remember, I was the person who told you we were in a bear market in October. I have videos. Go watch my videos for the first week of October. As we were falling down in that first week of October, I want to show you it. I said, guys, we're in a bear market. And the reason why I said that was because I traded a couple. I've been a trader since 1999. So I experienced a couple bear markets. So here's the daily of the Qs. And here's October 1st. So I didn't call it in the first few days of October, but after we moved down like this, October 4th and 5th, and then we started moving down like this, I said we were in a bear market. You know what happened? A lot of people out there, probably maybe yourself included, and it's okay, and I respect that, thought I was crazy. And I didn't call it a bear market because it was defined as a bear market. Everybody has their own definition of a bear market. I do not believe there is one definition. I have heard the 2 consecutive quarters of negative growth, 20% pullback in securities. I've heard it all, and I've heard 20 other definitions. But if you're actually trading a bear market like I was back in 2002, 2003, 2008, where this had similar feelings to this market. So yes, the Qs have plummeted. Yes, I predicted that at the beginning of the year that it would happen before the end of the year. Yes, it's already happening. But I am the person now showing you that this is a chance in a once in a 3, 4 year opportunity to be long and make money. Now, of course, I want to answer the question. Well, fair enough, Mark. I'm with you. And there's actually more statistical evidence. Maybe I'll look for one more parameter or so. But I want to show you even more importantly why I think the market is actually bottoming here, and why and how you actually go about it without choosing the bottom. Because here's the bottom line. If you are actually trading common stock, it becomes a lot more difficult to call a bottom. You sort of have to have more precise timing with calling the bottom of the market if you're holding common stock. I'll prove it to you. So, for example, let's say you like Apple. You think Apple is bottoming here. And you see Apple near the lower end of the range. Apple hasn't had, 4 days like this in a while. You have to see many people don't even understand like today is Christmas, today is Tuesday. Do you understand last Tuesday, a week ago, Apple was $167.53. I kid you not. 1 week ago, Apple was $21 higher. Can you believe that? Would you believe me if I told you Apple dropped 12, 13, 14% in the past week, including a day where there's no trading today? Ladies and gentlemen, this is one of those things where I humbly believe you are going to deeply regret not being part of this bounce. And just as I predicted you, as you're getting emails from gurus who are like, I think this market is ready to bounce. I like to, comb my ponytail and short $5 names and act like I know what I'm talking about after something may already happen after the fact. And you might be listening to those gurus right now telling you that's going to bounce, but I'm going to show you, and I'm going to show you the names I'm attacking. I shared with you my portfolio already. I'll do it again. Again, I'm loading positions and I'm taking different positions. Now, what I'm going to do with these positions to me at this moment is hold them. I'm either going to make or lose money, right? Like every position. But what I'm going to do from this point forward, you'll notice that if you were trading with me yesterday, I started opening February expirations. I'm going to actually start opening February and March expirations. I'm going to prove it to you that buying common stock is very hard. Let's say you buy 500 shares of Apple. Doesn't cost a lot of money. $75,000 you're laying out for 500 shares of Apple. If Apple drops 5 points, you're going to drop a brick. You're going to be like, oh my God, I'm down $2,500 on 500 shares of Apple. You're not going to feel good. But if you're in call spreads here in Apple, and Apple drops 5 points, you're going to be like, I'm down a little bit of money. I could hold it till I'm up money. I want to show you why that worked before. So if you remember, the Tesla trade we made money off of was right over here. I bought puts in Tesla near the close on Friday, December 7th. I bought not puts, but a put spread. So what happens is the next day I was up a little money when it broke down a little. Then it bounced up and I was down money, down money, down money, down money, down money, bang, up money, up money, up money, up money, up money, up money. So you have to remember, when we were buying the put spreads in Tesla, it was at 357.97. Let's call it 358 bucks. Tesla dropped to 295. Tesla dropped over 60 points since we bought that put spread. But I'm telling you right now, if we shorted shares of Tesla at 358 near the end of the day right over here, we would have gotten stopped out when it hit 377. We would have seen our position go 19 points against us. God forbid you're holding 100, 200, 300, 400 shares even of Tesla, very modest size, even though it's an expensive name. And you would have gotten, punched in the face really hard. However, if you were in a put spread, you wouldn't have been inclined to throw away your position, which we didn't, and which we made money on Tesla, because you would have been able to say, okay, I could be more relaxed and wait for the trade to work. That is the advantage of options. The advantage of options is clearing your fear barrier. That is the advantage of options. I wouldn't be able to hold. You think I'd be able to hold common stock in all these positions in our charitable account that I show you? In our charitable account, you think I'd be able to, hold Goldman Sachs long, BABA long, Nvidia long, BX long, Gold short, UPS long, OIH long, and Citi long? You think I'd be able to do that holding common stock? So with that being said, let me show you the opportunities of the names out there and exactly what I'll be playing. OIH. This is the opportunity of this might be a longer opportunity. This is an opportunity. If you want to buy OIH at these levels, the last time you could have done it was 2001. The low of OIH is 1332 this month, where it closed at day lows. It was 1393 back in September 2001. I don't want to remind you of what happened in September 2001. That was with the 9/11 attacks, obviously. Ever since then, a swing in oil, granted a very long-term swing, would have brought it all the way back up to $76. This opportunity in OIH, to me, is a once in about a 20-year opportunity. I think being bullish here in OIH makes sense. And I'm going to show you how I played this one. And I'm also going to show you names that I haven't played yet and which I plan on getting to, because I want to do a $100,000 option bet. I want to show you everything I'm doing. But right now, Melnick list of names, watch OIH. This is a once, to me, in a 20-year opportunity to own oil at these levels. If you think that OPEC is going to sit there with their fingers up their nose and their head scratching, like most of the other gurus who are telling you, Captain Hindsight things right now. If you think if they're going to be sitting there, sitting on the majority of the world's oil, sitting there saying, we're not going to increase the price of oil, we're fine going bankrupt, you are delusional. You are delusional if you think that. Now, I don't know how OIH is going to go up. I humbly believe it's going to be one of those things where you wake up one day and oil is gapped up huge because OPEC had a meeting. If you think all those princes and God, that sounds so medieval, princes and kings, and do they have archers sitting there on top guarding the barracks? If you think these, Middle Eastern princes and kings are going to be sitting there saying, yeah, let oil plummet, who gives a you know what? You are sadly mistaken. You are very sadly mistaken if you believe that. I think, I don't know exactly where OIH is going to bottom, but this is how I played it. What I did, just let me log into my trading software, and this is how I would play it if you're not in it as well. What I ended up doing, and I'm logging in to show you, what I ended up doing was I bought the $13-15 call spread. Just gonna pull my software down here. One moment. All right. And let's get you that. So what I did here is, if you look at the bottom right box, what I did was I went to February 15th expiration, and I bought to open $13 calls, and I sold to open um, the $15 calls in OIH. Is that what I did? No, I did 15, 17. Sorry. Those are different strikes. I did 15, 17. So what I did was here is I ended up paying, let's see, I ended up paying 35 cents Right now they closed at 30 cents. So for 30-cent bet, 30 cents in options is $30. For $30, if you were to bet $1,000 on this play, meaning you're not going to lose more than $30, you'd get, let's round off to 35 call spreads. You would be able to make 2 points on 3,500 shares. You would be looking to make $7,000 max return on your $1,000 bet. And no matter if all the world's oil dissipates simultaneously and oil goes to zero, you're going to lose $1,000 if you're wrong. The best case scenario, oil explodes up in value, and you have the potential to make 7 grand minus 1 grand, 6,000 net profit. Not a bad risk reward. For me personally, now, if I was opening it, looking at more of my charts, I would actually go to April because April you could spend 44 cents for the April call spread, and you're basically betting that between now and the next 4 months, this is a monthly, in the next 4 months, that you could rally in OIH. And again, even if OIH gets to $16 from 1332, it is still bearish on the, overall. You don't even have to be bullish in oil to think that it is somewhat logical that this name can bounce. Just my thoughts. Another name that you have to keep an eye on are solid names that have no drama behind them. Like, even though I like Apple and I think Apple bounces, I think the whole market bounces. I think it's going to be hard for you to find a name that isn't going to bounce. But let's just call it how it is. Apple dropped about $90 since October. I know that to some people they're like, really? $90 for Apple is, I don't have to even begin to insinuate how enormous it is. Do you remember when Apple was a $1 trillion company, ladies and gentlemen? Do you remember that? Let me bring you to current reality. Apple is under 700 billion. Remember when they were over a trillion, like 1.02 or 1.03 or 1.1, wherever they were? It is under $700 billion as of today. You want to talk about wealth exploding and evaporating? Apple is a $696 billion company as of today. Facebook. Facebook. Remember that? Remember that? Remember Facebook being worth about 600 and change billion? 356 billion. Remember Amazon trying to fight Apple to hit $1 trillion? Yeah, Amazon is 657 billion as of now. Excuse me. So, again, we're not talking in a matter of years that it took Apple to do this. I mean, you have to understand, like, here's a monthly chart of Apple. If Apple even bounced 20 points here, you can make every bearish argument in the world. I am telling you, this is one of those opportunities that for Apple to fall like this many points in this many months, I mean, I would say this is probably every 20 years you get one or two of these opportunities to buy Apple down here. Does that mean it's going to work? I don't know, but I'm sure betting on it. There are other names in which I like as well here, and other names that I want to bring up to you that I'm watching for a potential long. And I want to bring up a company, a special company, which I actually bought. Um, I actually bought semi recently. I actually bought it here on Thursday, and it's one of the names that have been paying me money, even though the market kept declining, and it's BX. And the reason why BX, when I speak to my sources, let's call them, when I speak to my sources, you have to realize that BX makes money by making deals. They do acquisitions, stakes, etc. That's how they make their money. According to my source, BX actually loves this sort of stuff happening here because they're going to be able to make deals cheaper. They're going to be able to, this is going to be the company that's going to pick up a lot of the quality names on the cheap. Now, it feels a little weird because I was buying this thing um, on December 20th as an overnight. If you follow me on Twitter, you'll obviously know. And it's one of the positions in which I'm doing relatively well in at the moment, obviously, as it exploded up higher. But I do want to mention on Blackstone, this is one of the companies that, if and when the market bounces, they're going to be able to do deals, acquisitions, mergers with, buying stakes in companies on the very cheap. This is a very solid company to own. I want to point out NVIDIA, name that has been getting absolutely crushed. Now, NVIDIA was a $292 stock in October. 292, they dropped to 127. That's a $165 drop in Nvidia. I know it sounds impossible, right? The Nvidia dropped that much. This stock is overdue for a bounce. The last time we called the bounce was actually, if you remember, right over here, where we started flushing through 180 right over here in late October. We bought it. I actually sold out the next day as our calls exploded, only to watch Nvidia go up another 20 points, $20. And I think now is the time to own Nvidia again. Now remember, I think you go to March or April. I am every day the market goes down, I just keep adding. The truth is, even if the market goes up tomorrow, I know I'm hoping the market goes down a little more. I know that sounds a little masochist, like a masochist to some of you, because I have all these positions. But the more and more market comes down, I'm like, bring it in. I am not betting that the world is coming to an end. I'm sorry. That is a bet that you should never take. The world comes to an end, doesn't matter what we do now anyway. If the world doesn't come to an end, I think we could profit phenomenally from it. Always bet on the world never coming to an end. I remember back in 2011, after 9/11, and I had some very unique pictures, and actually some news services actually tried to buy those pictures off me of the 9/11 plane crashes. They offered me, I think at the time it was like $25,000 for my pictures, and I said, I'm not here to profit off a tragedy like this, and I just backed off, and I didn't do it. But I was very intimately involved in the 9/11 um, tragedy, as I did know people who were there, and I did take shots, and I witnessed it, and I always share my story every September 11th about it. But I will tell you, at the time, the mentality was world's coming to an end. And I saw the Nasdaq go from 5,000 to 1,200 and change, or it was 1,100 and change. It was ridiculous. It was ridiculous. And everybody acted like that was it. We're done going up. World's over. 9/11 happened. And it was very easy to get sucked into that. Nowadays, we have things where, people I feel are overreacting to certain things. And when people overreact, psychologically, it's a time to buy. I mean, everybody is familiar with it, but I just want to show you again what happens during a government shutdown and why you shouldn't be scared of a government shutdown. So, again, I'll move my mug so you could see it. Here are the last 5 government shutdowns and how the market traded during a government shutdown. We're currently in one in which we don't know the results yet, right over there, obviously, for the current government shutdown. But let's just call it what it is. Let's just call it what it is. Time before that, we headed higher. 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 And those are how the S&P moved while the government was shut down. So no matter what you think about it, if you look statistically, you will realize that a government shutdown is not the most bearish thing in the world, generally speaking. So that's another thing to take into account to your bullishness. Another thing to take into your account in your bullishness is the following. You have names that are breaking major, major, major support levels. So even when you look at, for example, the weekly, the weekly of the triple Qs, even if you look at the weekly of the triple Qs, you'll notice that even during the most bearish markets, I think I actually want to take you to the monthly here. And I want to show you what was, this is, this was 2000 plummet. And I want to show you something here because the Qs went from 187 to 143 in 3 months, less than 3 months, whenever this month closes. You got the picture. Month is almost over, year is almost over. So we went from 187 to 143 on the triple Qs. That's a 44-point drop. Look at the Qs over here. Look at the Qs over here. You went from 103 and you dropped to 60. That's about a 43-point drop. Now, if you'll notice, even though we continued bearish afterwards, when it hit 60, the very next month you hit 74, 78, or almost $75. You bounced 15 points before potentially heading lower, which you did. So that's what I mean when I say, guys, you don't have to be bullish overall in the market to make money to the long side. You have to understand that there will be funds stepping in and buying into this bloodiness. And what I'm going to do is my Christmas prayer is I am going to sit here and hope the market goes down because the more it goes down, the easier it is for me to open these positions, the easier it is for me to throw money at it. I'm also going to be sharing my overnight stats with you guys. Currently, my account is gyrating because I have a lot of long positions. It's been down a little recently, but I'm going to show you actually month by month how my charitable account is performing. And of course, we share 100% of the entries, 100% of the exits. There's no thinking involved behind it, and we'll show you how it works. So, another name I think we should buy, let's just talk about names that we can actually buy here. Buy here. Names that I like that actually could go up are names that are actually had good news and headed lower. I think now is the time to look at some of the retail names. I think a name like Macy's, and again, Macy's was one of my names in January for the year, which worked out beautifully because, Macy's shot up and a lot of you guys crushed it. But I also want to mention that Macy's is not too far away from the level in which I called it as one of my longs this year. Now, why is that important? You have to remember why I called Macy's as a long, and I'm actually going to show you. And if you read this on Macy's, you're going to want to own it, so be careful. So what I did was I gave you my dividend stocks, my must-own dividend stocks for 2018. And again, this is when Macy's was 25.19. I put a first target of 31.50. It obviously exploded through there. And what I was doing is I was bashing Macy's when it was over $65 and others in the retail industry. Here is the reason why Macy's is a buy here. The market cap was 7.67 billion. Let's call it 7.7 billion, but that is worth less than the property in Midtown Manhattan alone. I don't know if I used to live on 50 West 34th Street across from Macy's. That little piece of real estate in New York City has to be one of the most expensive pieces of real estate in New York City by far. I can't imagine a more desirable spot than, you know, that entire 2 avenue multi-block piece of real estate that Macy's owns. It's getting to the point again with Macy's and where you have to look that if Macy's were to liquidate, that would actually be worth more than what it is today. The sum of Macy's parts is worth more than the market cap. Now, if you look at Macy's market cap now, it's $8.65 billion. dollars. That piece of real estate in Manhattan has no real price tag. According to some of the real estate brokers, who I know real estate brokers who are selling $100 million properties in Manhattan, as one of my friends estimated to me, and I know a lot of the firms there that do real estate, according to one person I spoke to, He estimated to me that that piece of property is worth $35 billion. He's like, it's one of those properties that will always appreciate. It's in the dead center of Manhattan. Everything converges around there. And when people want to go to Manhattan, they go to two places. They go there or Times Square. And Times Square is 8 blocks away from Macy's. And it's just one of the most valuable pieces of real estate out there. I think you might look at Macy's because it's getting to the point where the sum of the parts are worth more than the whole, especially in a name like Macy's. Other names that I'm looking at, look at names that reported well on earnings that are getting absolutely slammed here. So, for example, like Nike reported good earnings, and Nike has been, falling with the market. I highly doubt whatever happened in the past month changed whatever and whomever wanted to buy a pair of Nike sneakers. Names that reported good earnings like Nike that fell can be potential buying opportunities. You also have software companies that reported pretty well, like Pivotal Software reported pretty well and fell. You have other companies like Twilio, which had, in my opinion, phenomenal earnings. Stock, would you believe me if I told you that 2 weeks ago, less than 2 weeks ago, 2 weeks ago, Twilio was $100.47 with no negative news, with nothing negative happening to the company, with no fundamental things changing. Twilio is definitely a company in which I can see heading higher. The stock just dropped to 75. For what reason? Because the market fell. Nothing changed fundamentally with this company. And oh, by the way, how many times are you going to be able to buy Macy's with a $5.15 P ratio? Macy's right now has a 5% dividend yield. Macy's, you're not investing in one of those garbage energy companies which give 75, 80% of their profits to their dividends so people will buy them. You're dealing with Macy's, big, clunky retailer Macy's. Every time you enter a Macy's in a shopping mall, you did it because there was good parking there, and you're trying to get it to another part of the shopping mall. That Macy's is paying a 5.19% dividend. Do not underestimate the fact when these companies start becoming to the point where it's like, well, I could leave my money in the bank and make 0.000, insert your number here, or I could buy a craptacular Macy's, which has a piece of real estate that's worth more than the entire market capitalization of the entire company and is paying me a 5% dividend yield right now. Hmm. Definitely, definitely a time to look for dividend yields. Don't forget, if you're looking for long-term swings, here is the best name you can own today, in my humble opinion. AWK. This to me is a wet dream. This is what a wet dream looks like, is AWK. Now, without, it's wet because the splash of money around me, causes moisture in the air, obviously. But take a look here. I want to show you something. I'm going to take you to a monthly chart of AWK. Better yet, let me take you to a yearly chart. Here's a yearly of AWK. That is a yearly chart. It includes the bear market in 2008. It includes every up and down move every year. You want to know what remained true about AWK since 2008? Two things remain true. It never broke a prior year's low, and it always broke a prior year's high. When this AWK has a pull-in like this, and to me, this is my number one company to own long term. By the way, I'll come out on the record. AWK is by far, to me, the best company to own. It does well in bear markets. It does well in bull markets. It bounces on every pullback. It's a $15 billion company. You want to know what this company actually does? Like you're not going to get many opportunities to buy a pullback like this in AWK. This company keeps growing and growing and growing. It's like the Energizer Bunny keeps going. This one keeps growing. This one keeps growing. So what this company does is they provide water and wastewater services in the US and Canada. And it does it to approximately 1,600 communities in about 16 states. They operate water treatment plants, 72 of them, 527 groundwater treatment plants, sewage pipes. No matter what you think about the economy, no matter what you think about humanity, no matter what you think about BS politics, no matter what you think about world BS politics, whatever you think about it, you can be guaranteed no matter what technology comes out, humans will always need water. I know it sounds so obvious. Oh, Mark, did you know we're two-thirds made of water? Yes, I knew that in first grade. But look, water treatment, do you want to flush a toilet or do you want to use the outhouse? In a recession, were you flushing a toilet in the recession? Were you utilizing water to cook your pasta, to have a drink? Were you to make ice cubes? Were you utilizing any of it? What is the one thing that 100% of restaurants have out there? Water, as well as sewage, plumbing, sinks. It is part of humanity that will never ever change. So with that, ladies and gentlemen, I do declare AWK my number one stock to own for a 20-year period. Stay tuned because I'm going to unveil my favorite stock of 2019, a company that is going to take the world by storm, and I'm going to do a unique research report on it that's going to blow every analyst's their underwear, their thongs, their panties, whatever the analyst is wearing on that given day. It's going to blow it out of the water, considering that they were submerged, obviously. I'm going to release a research report that is going to take Wall Street by storm. I'm going to release fundamental data. I'm going to release logical data. I'm going to release technical data. And I'm going to tell you why this one company could pose to potentially triple, quadruple, or go up 5 times in price, even if the market heads lower. And we're going to share that with you by the end of the year. With that being said, 20 you want a stock to pass down to your children. This is the stock I want to pass down to my children. American Waterworks. What do you think happens if they need to raise prices? You know what happens? They go to the municipalities, they go to whatever the government, the whatever the state districts, and they say we need to raise the prices. You know what the state districts say? Okay. You know how hard it is for these companies to raise prices and get away with it? They do it all the time, and nobody ever gives them blowback because the last thing people want to screw around with is water, whether it comes from treatment, sewage, etc. Nobody screws around with water. With that being said, you could pretty much, in my opinion, buy almost any name. Granted, if you're in a Facebook, you're subject to the recent drama. Granted, you're in Google, there's a little bit of drama. Granted, you're in Apple, there's a lot of drama happening in Apple. I think Amazon is solid. I think Amazon is a solid setup here in this bottom end. I don't see any reason why Amazon doesn't get you back to 1480, $1,500. That's another name that I'm going to be looking to buy. And again, if you're part of my Twitter service or the Newsbeat live service, you'll see in real time exactly where I'm buying it, what I bought, where I paid for it. Very, very easy to utilize. Another company that I think is very powerful in this environment, and another name that I should be attacking is first time ever. And remember, I was the person smashing this company. And again, this might surprise you. This might surprise you. And I actually opened up. Did I open up a position yesterday? Let me double check. Yes, I did. And I might even open up more. Alibaba. This is the bottom of Alibaba. This is the bottom of Alibaba. Period. Remember, I was the person bashing this stock forever. I was the person talking about China, communism issues. Nothing slowed down here on Baba. I think to have some Chinese exposure here. What do I mean by Chinese exposure? There's a trade war which can the U.S.-China trade war, which can negatively impact this and more. This is definitely one of the names that I already bought. I'm in at the moment a 133, 140 February call spread. No, January call spread, excuse me. January monthly call spread 133, 140. I think we're going to have a big move in it. But if I were buying it tomorrow, I would go out to March, February or March, April. So as long as you take time value on whatever you want to buy here, I think the majority of names are going to move up. You could look for particular stronger names and whatnot on this market. But for me, the way I see it, as long as you buy calls going out to February, March, April, even if they're call spreads, I think you're going to end up ahead. I think you're going to end up ahead on your trade. I think you're going to be ending up money. Please don't also underestimate the banks. I opened up Citigroup. You know, you're familiar with Citigroup? At the beginning of this month, on December 3rd, Citigroup was a $66.46 company. It hit $48. It dropped 18 points. Citigroup in a month. So when it comes to opportunity here, I do think even if we're bearish overall, even if Citigroup just bounces 5, 6 points before coming in even lower, I think you're going to be able to capitalize on that. So I gave you a myriad of reasons of why I think the market is bottoming. As I guaranteed you, after Sunday, you're going to get a lot of the subpar type gurus giving you the presentations talking about how or when or what they're watching of the market bouncing. As I already guaranteed you, it's funny if you actually watch Sunday's video, I was actually telling you they were going to say that because a lot of the gurus, especially the ones around me, and the ones who follow me, and the ones who watch me, they tend to. It's almost like talking into like the recording device, and then what happens is a day or two later, like they hit play. So a lot of the things you do here, here, here first, does get reiterated to you. Careful for that. Follow somebody who's showing you positions. Follow somebody who's putting their butt on the line. Follow somebody who is being the first person to bring you this content, and be very careful of the so-called gurus which regurgitate the value that we try to bring here for you. Ladies and gentlemen, I wish you a Merry Christmas. Ladies and gentlemen, whether or not you celebrate Christmas, I wish you the happiest and most festive of moments right now. There's a reason why subpar gurus regurgitate everything that is said in the Newsbeat live show and the Newsbeat live community. Happy trading, make money, Merry Christmas, and we'll see you guys tonight on the Newsbeat show and tomorrow morning on the Newsbeat live trading broadcast. Have a wonderful, festive, and beautiful day.